In this video, we will look at the bullish engulfing pattern, which follows a bull harami pattern. Okay, a bull harami pattern is something which I discussed in yesterday's chart analysis video, in which I analyzed the chart of Pepsi. Have a look at that analysis. Coming back to this video, you see the price going down here, and I have drawn this obvious support line, the blue line here. And let's analyze these three candles. And as you can notice, I am not using any Western indicator here. I am simply relying on candlesticks for my analysis, and that to me is more than enough. So let's look at these three candles. If you look at this candle, it's a very important candle on this chart because it confirms or tests that support level. This red candle fails to close below that support level. So that's a very important point or a signal for us that at that level, at that blue line, you have the bulls that are more powerful. Okay. In Japanese candlesticks terminology, every candle is referred to as a battle. It's a battle between the bulls and the bears. On this candle, you might think that the bears have won the battle, and they have, but to some extent, the bulls have also played a role here by keeping the price above that blue support line. Let's come to this candle. This candle completes two patterns. One is the bull harami pattern, which I already discussed in yesterday's video. Second is the high wave candle. High wave candle means it has a small real body. It usually comes after a trend and it has a long upper shadow and a lower shadow. It's a neutral pattern, it's a reversal pattern. Bull harami is you have two candles. One candle is a tall black or a white, or sorry, one candle is a tall red real body. This comes after a downtrend. The second candle is a small real body, and the second candle is completely engulfed by the first candle. That's the definition of bull harami. Again, it's a reversal pattern and it's bullish. Okay, that's why it is called as a bull harami. I have discussed this pattern in detail in the yesterday's video. So now all of these candles, the bull harami and the high wave candle, all of these are pointing towards a reversal. What does reversal mean? Reversal simply means that after these two candles, the market is either likely to go sideways or up. That's the meaning of a reversal. Reversal doesn't mean that the market will go up. Okay. So reversal means the market will either go this way or this way. Reversal also means that the market going down from here, the probability of this event happening is low. The probability of either of these two events happening is high. Okay, let's come to the third candle. This candle completes the bullish engulfing pattern. What's a bullish engulfing pattern? Well, it comes after a downtrend. It has a small red real body. The second candle is a long green real body which completely engulfs the prior small real body, and it's a bullish pattern. Now, one thing to understand here is for a bull harami, the low of the pattern does not become support. But for a bullish engulfing pattern, the low of the hammer, the low of the pattern becomes support. So this can be used as a stop loss level, and the entry point would be the close of the pattern, which is the bullish engulfing pattern. So this is the amount of risk that you are taking, and the probability that the price will go up from here has become very high because this bullish engulfing pattern also tests or successfully tests or confirms the blue support line. That adds to the probability of the trade working out, and your target would be somewhere here. So if you look at this, this is your reward and this is your risk. So we are talking about a reward to risk ratio of 2:1 or 3:1. probably. Okay, so you have to measure it and then ascertain your reward to risk ratio before you take the trade. Okay, so that's the analysis of these three candles without even using any Western indicator. I have just analyzed for you what these three candles mean. This high wave candle is simply confirming the bullish implication at that support level. This high wave candle also is completing a bull harami. This green candle is confirming the bullish implication of the bull harami. Okay, so I explained a concept called as echoing. Echoing simply means that subsequent candles, subsequent candles like this confirm your already existing view in the market. So your existing view in the market is bullish once you see these two candles. That bullish view is confirmed by a close of this green candle. Look at the powerful close of this green candle. Plus, that green candle is confirming the prior support line. That's very, very powerful. Remember that for a bull harami, the color of the second candle does not matter. It can be green or it can be red, but it has to be engulfed completely by the first real body, long real body. However, for a bullish engulfing pattern, the color of the first candle is very important. Okay, they have to be opposite colors, and it has to be black. Sorry, it has to be red and green. There is another pattern which I will discuss in some other video. It's the same two candles, but instead of coming after a downtrend, this same two candles they come after a uptrend. So there is an uptrend, then you have a small, this is a red real body, and then you have a green real body. So this pattern here, it is coming after a downtrend. Here it comes after a uptrend. This pattern is called as a last engulfing top, and it's a bearish pattern. After this candle, if after this pattern, if the next candle closes below this level, you are allowed to take a short position. Okay, anyways, that is something we will discuss in some other video. Coming back to this chart, everything, all the action that is happening here, whether it is bull harami, whether it is the high wave candle, whether it is the bullish engulfing pattern, whether it is the confirmation of the support, everything is pointing towards bullishness here. So it makes sense to take a long position here, or if you are trading the spot market, it makes sense to buy some shares here by keeping your stop loss here. That's the entry point, that's the stop loss, and that's the target. This is about taking the trade. Now let us look at how do you manage the trade. Let's look at what happens next. See, at this candle, you wouldn't exit the trade because it is confirming your bullish view. But on this candle, as you can see, there is heavy selling happening at that particular price point. Okay, so it makes sense to exit at that price because longer the upper shadow, the more bearish the market has become. Remember, longer the upper shadow, more bearish. Longer the lower shadow, more bullish. So if you look at this high wave candle, the lower shadow is longer than the upper shadow. So that is more bullish. Plus you add to that this support level, then you add to that the bull harami, and then you add to it the bullish engulfing pattern. Everything points towards a long trade here, or you can buy at that level. And we have done this much analysis without using any Western indicator. If you do want to use Western indicator, what you could do is you could use RSI here. So if you see the price is going down from here, between these 2 points, if the RSI is pointing up, that is called as a divergence, which is called as a positive divergence. If that's the case, at the close of this candle, if you see that the RSI is rising between these 2 points, you could consider that as a positive divergence. So that's a way of using a Western indicator. But anyways, without even using Western indicator, we came to a lot of conclusions on this chart, right? And you have to learn how to reach those conclusions before even you use any Western indicator. Okay. To learn how to do that, you can go to this link, rohitmusare.com/Udemy. I have the Japanese candlesticks trading mastery program where I discuss each and every pattern in detail. There are more than 1000 chart examples in that training program. It has multiple levels of training, and thousands of students from more than 170 countries are already doing that program. So have a look at that program. Go to that link. That link is in the description box. It's the first link in the description box. You will learn how to read charts the way I am reading this. And please understand that chart reading skill is a skill that takes time to master. It will not happen overnight. It will take you 1 or 2 years to reach a level where you can fluently start reading charts like this without using a Western indicator. So, just to quickly summarize, this was the bullish engulfing pattern, already echoing the bullish implication of the bull harami, and all of this confirming the prior support just adds to the probability that the trade might just work out here and providing us a good reward to risk ratio. So, that would be my commentary on the chart of Colgate. This is a daily time frame chart of Colgate India.